Joining us now is Andrea Garcia, Cantera, CFO of Santander. Andrea Garcia, great to have you with Nera and myself this morning. So now we have some of the numbers in terms of the scale of the restructuring. The question for us now, 700 million euros or thereabouts, 3,200 workers to go in Spain, 1,400 jobs to go in Poland. Is this the end and the sum total of the restructuring, or can we expect more substantial moves from you? Good morning.
Good morning. Well, first of all, Santander has delivered its strongest underlying quarterly performance in 8 years, reflecting the progress that we have made in our commercial and digital transformation. Our businesses in North America and South America continue to perform extremely well, and while the charges relating to ongoing restructuring in Europe have impacted attributable profit as we anticipated, we are already starting to see the value of these that this will create going forward, both through improved revenue growth and better efficiency. It's clear that the relationship between customers and banks is changing. Customers are channeling more and more transactions through other than the physical distribution network, and we have to continuously adjust to that new way of these relationships.
Great to speak to you this morning, sir. You mentioned improved revenue growth, and this is a challenge facing banks in Europe generally in what a lot of people have referred to as the negative interest rate abyss. Are you able to do enough to mitigate the low interest rate environment in Europe, which could get even deeper with the ECB meeting this week?
Well, it's clear that negative rates have a negative impact on revenues, on net interest income. Against that, what we are doing is improving the number of loyal customers. We are increasing the relationship with our existing customer base. We already have over 20 million loyal customers. These are customers that choose Santander as their first banking relationship, and 35 million digital customers, which means that we are doing more and more through digital channels, which helps us cut costs, as I referred to before. So through these two measures, we are showing actual profit growth in the bank.
Today is an AGM, and you're going to go for your third capital increase. So this is Ana Botín and the team coming back again for more capital, albeit, yes, we understand it's for the Mexican subsidiary. This is one of those delicate lines to walk, isn't it? Coming back for more capital. Do you think the appetite is there from the institutions to do that? Do you think the investors could run out of patience on these capital increases?
Well, this, as you said, this is not a capital increase in the traditional sense of the word. This is just an exchange to buy back the minorities that we don't own in Mexico. So this will have a very small positive impact on our capital ratios. If we were able to get to 100% of that minority stake, this would only represent 5 basis points of capital. So raising the capital ratio is not the main purpose of this transaction. On the other hand, we are generating capital organically. We generated over 10 basis points of capital organically in the quarter, and we are in a position to reach our capital targets announced in our Investor Day.
OK, well, we look forward to hearing more from that Investor Day as it continues, Jose. In the meantime, let me ask you about the UK, because by the end of today, we'll know who the new Prime Minister is here in the UK. Of course, it's a near certainty that it's going to be Boris Johnson. I do wonder whether your baseline position has shifted at all on the prospect of no-deal Brexit.
Well, as you know, we are a local bank in the UK, so our main concern is to continue serving our customers. We have millions of customers in the UK, and we are very well prepared to serve our customers in any event, in any outcome. On the other hand, when you look at it from the European perspective, we are incorporating in the UK. We don't face any passporting issues relative to other institutions that they may have to make some adjustments. So to be honest, our main focus is to be there for our customers, and we are ready to serve them in any outcome.
Can I ask you, obviously, the Andrea Orcel story runs to the core of the news line. That, we understand, he is asking for double the bank what you were prepared to pay him. Are you negotiating a settlement just to make this issue go away?
Well, this is a matter for our lawyers to resolve. Our focus is now on the future and delivering on the strategic plan we set out last month in London. We have set very stretching targets, aiming to get a return on tangible equity of 13 to 15%. So our focus is now on achieving the goals we have set out, and that's what our shareholders rightly expect us to do.
How damaging has this episode been for the bank's reputation, Jose, finally?
Well, I don't think it has. Again, this is a matter for our lawyers to resolve. And again, the day-to-day of the bank is just to focus on the BAU and delivering on our targets.
Can we go back to the UK in terms of the discussion? Yesterday, we spent a great deal of time discussing on the show about whether we're in a recession, heading towards a recession, a slowdown. What can you tell us about the business in the UK in terms of performance and any cracks therein?
Well, there is clear great competition on the mortgages in the UK, and we are seeing that in prices that probably we've never seen in the UK before. Also, we are seeing pressures on fee income. Against that, you see that we are starting to cut costs. Quarter on quarter, our cost base in the UK is down, and we have the lowest cost of risk in many, many quarters as well. So although, yes, there is pressure on the revenue side, and that is likely to continue, the things that depend on us, which is basically costs, operating costs and credit costs, is what we are focusing on.